Good morning, everybody. Shane here from the Brookings home team, powered by Century 21. And again, it's Monday morning, 8:15, ready to roll here, and got a familiar face. Yeah, it's only been a few weeks.
Yeah, 2 weeks, I think.
Scared the crap out of you last night and said, hey, Mark. He says, yeah, let's get doing this. So we had to rearrange some of the schedule here a little bit. So thanks, Mark, for kind of adjusting yours to...
Yeah, no, thanks for the reminder. 'Cause, yeah, not used to doing it every 2 weeks. So,
So we jumped in here, and Mark graciously agreed to get on and talk about a tip here this morning. So as you guys are coming on, please let us know. Give us a heart, give us a thumbs up, and let us or be sure to share or tag this video with anybody else you think would be interested in it. So, Mark, what's the tip for today?
So the Monday morning mortgage tip I wanted to talk about was making extra payments to the principal of your loan and what the consequences of that can be. So by no means am I a financial advisor. Certainly, money on your house and your mortgage is probably the cheapest money that you're going to borrow when it comes to your debts. But as far as paying that mortgage off, I kind of ran some numbers on a $200,000 loan over 30 years. Let's see, your payments would be like $926 on principal and interest, and if you made an extra $100 a month payment towards the principal, it would pay it off 4 years, 10 months early, and you'd save about $24,000 in interest over the life of the loan. Wow. So, pretty substantial amount of shaving the life of the loan down to about 25 years compared to the 30. Mm-hmm. I've had some people that the 15-year rates have been pretty tempting. However, doesn't fit everybody's budget, of course. It's a lot higher payment. So if you do go with the longer term, it's one way to kind of combat that. Mm-hmm. If you are looking to pay it off sooner than 30 years. So majority of people could probably afford an extra $100 a month compared to the 15-year mortgage.
And you're not locked into that payment on the 15-year.
Exactly.
If you're on that 30 year.
Yeah.
So, and if you have a bad month, you don't have to make that extra $100 payment.
Exactly. You can always pay more. You can't pay less. So,
yeah, right.
Yep.
Otherwise, they're knocking on your door. So.
Yeah, exactly.
You don't want that. But yeah, so that was about $24,000 that they would save over a 30-year term.
Yeah, $24,000 in interest. Absolutely.
Shrink your loan into about 25 years.
25 years.
Something like that. So, all right. Well, that's a great tip there. And I can attest firsthand that is something that I do. My payment is X amount, and I actually round up to the nearest 100, and that's what I've always done since day one. So we're getting close to getting her paid off.
Absolutely. No, it makes a difference. It really does.
And like I said, if you don't have a good month, then you don't have to make that extra payment. But all right, Mark, thanks for that information. If you have more questions for Mark, please let him know. Feel free to give him a call. I'll have his information on the top, on the bottom, or on the sides, wherever your device allows you to see that. And you certainly can direct message him too, or give him a call, like I said. So if you have any questions for any of us for any future episodes, let us know. Speaking of which, we're coming up to episode 100. I'm excited. So
what are we at right now?
I think it's 97 or something like that, 96.
Awesome.
So almost to 100, guys. It's pretty exciting. But thanks for watching. Have a great Monday. We will not be back next Monday. I will not be in town, but we'll be back here in 2 weeks. So let us know if we can help you guys out. We're ready to go. Have a great day. See ya.